And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
All right. Words of Hulk Hogan. Welcome to the coach's playbook, brother. We were just talking about that beforehand. We're all feeling good because Thanksgiving is just around the corner. It's mine and Dan's last day here. So we have an extra special topic today. We're talking about bias in trading, when it's a good thing, when it's a bad thing. You should just basically be aware of it. But first, I understand, Mick, you have a shout out for us.
I do. Big shout out to Augustine Sorovi, riding out a couple contracts in the S&Ps right now, alongside up about $2,700. So pretty good day, and shouting out to you, Augustine.
Good show. Things have been a little bit, what's the vibe today? A little slow. I haven't had a chance to look at the markets yet, really.
Volatile off the open. You got a nice bottom feeder in the NASDAQ, checked those overnight lows and ripped higher from there. That was a pretty nice move. But there's some action going on. Crude oil yesterday, though, holy cow.
Crude oil has been where the action has been at, which kind of brings us in. Yeah. Brings us into, you might develop a bias. So that'll go into our show theme today. So Hogue, as the elder statesman here, I thought maybe you could talk a little bit about how you see bias in a market, and whether you, with the people you coach, if you see it more helping or hurting traders overall.
Well, I think that there can be a thin line between bias and conviction. You know, if you have conviction in your idea in the marketplace, sometimes that can be a good thing. When I've seen bias in the past, especially in the trading pit, it was, somebody standing next to you saying, I know this thing's going higher, man, it's going higher. And they're loading up. And then the market turns and heads the other direction, and they're not prepared for it. So, bias, to me, I think we all tend to have a bias when we're looking at the markets and where we think the market's going to go. I mean, you sit back and say, well, it looks like it's going higher. Bang. That's a bias. I think the most important thing is to recognize when your bias is good and always be monitoring for information that is contrary to your bias. And if that information becomes more important than the information that created your bias, you've got to pay attention to it.
Good points there. Dan, do you usually go into the day with a bias of some kind, at least, or just based on sort of the trend or market structure?
It's a good question. I mean, don't get me wrong, just like anyone, like I have my opinions of what the market should be doing. And I've learned, don't follow your opinion. Your opinion's usually wrong, because that opinion's created by biases of what's going on, right? Like I have my own beliefs due to why the market is doing certain things. That's not what everyone else believes. So I've learned that that's the very wrong thing to do. So this is where, for me, defining the channels, I've talked about that a lot. That helps kind of get my bias out of the way. So I really have to come in with that plan of like, where is this market going? And if it goes higher, how am I going to react? If it goes lower, how am I going to react? And if it goes sideways, how am I going to react? I mean, this morning I was looking at these markets and I saw where NASDAQ was way down off the open, and I saw S&Ps up on the open, and I was kind of intrigued by that. I said, okay, there's got to be some meeting of the minds here today. I don't know which is going to be the right direction. So I'm going to watch the two, and I have to trade to what I see, because it would have been different if I've got S&P down, NASDAQ down. My bias is probably going to be like, okay, continue to look to the downside. But because there was such a divergence, it was a matter of looking at the two markets and saying, okay, something's out of whack here. These 99% of the time move in conjunction with each other. So when one's way down and one's way up, they got to meet somewhere. So it's really hard at that point. You can't really have that bias of like, okay, just short them or go long. find where they're going to meet, and then you got to trade to that. So bias is I think it's an interesting thing to think about when trading. We can have long-term biases of where we think the market's going to go over time. But when it comes to day trading, those biases don't mean anything in reality. You got to trade what this market's telling you. There are so many factors to look at on that short time frame. So yeah, have a long-term bias. I think every single person does over the next, 90 days, quarter, year, whatever it is. Like, I'm looking ahead. I would like to be here because that's where my bias is going to be for my investment and my long-term strategy. But the short-term stuff, clear that out. Have a system as how you approach the market each and every single day consistently to help keep that bias aside.
Mick, do you think there's much of a difference? Because we're kind of interchangeably, when we're talking about bias here, we're almost talking about the trend, right? Or with your weekly levels, sort of what's the market structure? If the market's been generally going up, then our bias is probably to the upside. So heading over to Mick, do you think, Mick, that there are any sort of biases besides just the trend, or are those sort of the bad ones? Like, I know a lot of doom and gloom people who are very contrarian, who are wanting to see like, oh, this is going to crash. A lot of people catching the knives the same way. I consider that a destructive bias, but do you have any biases beyond just what's happened so far, like the trend?
Well, I feel like that's kind of a tough question. I mean, I do think it's wrong to have a bias like this is going to crash, like put your money where your mouth is. If you have that bias, most people that are saying that don't. If I could just kind of pivot from your question, Jack, I think it's important to have a bias. Doesn't mean that you need to, you still need to be flexible. I think it's good to have a bias, we talk about top-down approach. Is the market going up, down, or sideways? If it's going up, my bias is that we could have continuation to the upside unless I see something on my charts, or, if you're a fundamental trader, if you're hearing about something or reading about something that gives you a bias to say, hey, maybe we stop going up, those kind of things. So like coming in as a day trader or, a position trader that you might hold something, like, I think it's important to have a bias. However, be flexible. Anybody who's traded for, even a short period of time, you can have a bias and be wrong. And, if you are seeing that, if I had a bias to the long side and we're selling off today, well, I was wrong, and that's okay. But as a discretionary trader, how are you exercising your discretion if you don't have a bias? If you're running a certain system or systems where there's no discretion and it's based off of certain functions and that kind of stuff, then maybe you don't need a bias. The systems are meant to be followed, very, very closely, very similarly all the time. But if you're a discretionary trader, a bias is good, but you're going to be wrong. I say that like I almost put myself out of business early on. I think the three of you guys have heard me talk about my soybean story when I had a short bias in the beans and China was just buying tons and tons of beans like they had never bought before. I mean, I almost got put out of business because I had a bias. I was thinking about crop conditions and yields and not about the appetite that the world had, or specifically China, for consuming that. So that was a bias that almost put me out of business. So, but I think you need to have one as a discretionary trader. So yeah, that's my stance on a bias. Flexibility is the most important thing. I mean, I know Danny was saying not to have a bias, but like, so I think you should, but like he said, you got to be flexible and come in here. Anything can happen. And, you could be riding out a trend for half of the day. And then, coming into the close or something, that trend completely flips on you. So
I think we all agree. Oh, Dan, I'll get right over you. You can go ahead.
Yeah, I was just going to say, I think Hogue kind of explained it, made it clear a little bit, right? You can have a conviction based off of what you're seeing in the market and your experience with that market, right? Like there's a difference in my opinion of like, okay, stocks are here. My bias says they're going to go higher. Well, why is that your bias? And is there justification behind that, right? If it's, people have their systems that say X amount of down days. You should look for a buy day here at this point. Like, yeah, that's kind of a bias, but that's strategy based. That's experience based. You have learned that that works for your system and you're trading to that. Traders may have a short bias today in, the S&P. S&P is on a strong trend to the upside. There's still money to be made on the short side there, right? There's still those pullbacks. I'm looking for my short bias to come into play. I can still make money doing this and kind of trading against the trend. So I think that's like the balance. Is this bias fact-based and experience-based, and you have learned that your system has dictated, okay, I have a bias because of X, Y, and Z, or I have a bias because one little factor says this market's going to go higher. And that's the difference. It's where is that bias coming from? If your bias is not found on fact and experience and history, and then that's where it's bad. But if your bias is based off of your experience, the facts of what's going on in the world that are unmanipulated, then the bias is a great thing because you can trade to that. But it's a matter of recognizing when the bias is correct, or we can call it a conviction based off of your strategy, right? There's a couple different ways to look at it. It's when it's just one little thing that's allowing to create that bias of like, I believe this one little thing is going to factor this whole market to go one direction. Then, okay, that's where it's a problem.
You don't want to get married to a trade. Like any bias that's built on observing technicals, right? Like a trend or something like that, or data you've done. That's the good stuff. Getting married to a trade, or worse, becoming a zealot, that's how you end up going out of business, right?
Mm-hmm.
That's the real bad stuff. And your facts have to be facts that are universally believed to be so, right? The worst is don't become a crank. Don't start trading on like gut feelings that reflect your own ideology of the way the world works, right? Like, I always use the example, I don't mean to offend the gold bugs out there or something like that, but just because you think that, the government's about to implode and gold will be the only currency, doesn't mean you should be long futures in gold, right? That's not good enough, I don't think. You need to have something that's based on like technicals that you could write down. Mick, I saw you starting to say something.
Yeah, well, I do have something to say, but it looked like John had been, kind of waiting at the edge of his seat. So I'm going to give it to him, and hopefully I don't forget my train of thought.
I know it's hard to do that, isn't it? You're like, okay, I got to remember to say this. I got to remember this. Oh, I forgot it.
This better be good, John.
We're all so polite here when we're on live camera. It's not like when we're behind the scenes before we start recording too.
Well, it was guys that are, guys that were traders, even at parties, they stood around in circles yelling at each other.
Oh yeah. There's
so
epic trader fights back in the day.
Absolutely. So, when you're creating your context of the marketplace, you're always thinking about, well, what direction is the market attempting to go? And how good of a job is it doing getting there? And, if they say that, for example, the market over a longer period of time has been moving higher and higher, you may still have that same context, but find in the smaller nuances that the market may be exhausted in that direction. And maybe it's time to trade for a pullback, to look for opportunities to sell strength in this. So maybe you can catch part of that pullback. And then once that pullback is over, come back in and start looking for longs in the continuation of the longer context idea that you have of the market. So you're always thinking about what the direction of the market is attempting to do, if it's doing anything, and how good of a job is it doing getting there. And then Dalton says, there has to be a ruling reason. There's probably a million little nuances that are telling you things to think about in the marketplace and things to do in the marketplace. What's the most important thing at that time? You can have a long bias for months and years, but that ruling reason on that day that you decide to take that short is because perhaps you're recognizing that the market is temporarily exhausted to the upside, or that the short time frame traders are way too long up here. We're going to need to alleviate some of that inventory before we can continue to go. He always says, sometimes the market has to break in order to continue its move to the upside. So, your recognition of context and the nuances and what the ruling reason for that nuance and for that trade is at the time is, of course, Is it bias? Is it hypothesis? Well, whatever it is, it doesn't mean anything to the market. We're here in the market's environment. We're not, the market is not in our environment. So recognize that bias, while it can be helpful, can also be detrimental, and always be thinking about the picture in the longer time frame, what the structure or the context is telling you. Find the nuances, determine which nuance is most important, as in the ruling reason for a trade. Take the trade, manage the risk. The rest is up to the markets.
Yeah, John, I'm glad I let you go and say that, because like I said, I think you should have a bias. But what John said, don't let that bias be detrimental. Just because you have a bias doesn't mean that you just go blindly shorting like I did, shorting the beans as they're making new highs every single damn day. Still hurts.
The exception to that, Mick, is if you have the ability to call the London Metal Exchange and tell them to stop trading nickel. Like our
there you go. There you go.
Yeah. You guys know about that, right? Earlier this year, that Chinese nickel trader, like the biggest thing ever.
Heard a little bit about it.
Oh,
yeah.
It's a wild story. We could talk a whole half an hour about it.
Oh
sometime.
my goodness.
But he basically was short so much nickel that he just kind of called up the exchange and like made them stop trading nickel. It's a little bit awkward for everybody involved, but most of us aren't trading that size. Sorry to interrupt there, but had to talk.
No, that's okay. I'm glad you brought that up. Yeah, no, we can't do that. So, have your bias, but then like you can't just cover your eyes and blindly, if you have a long bias, just buy it all day long. Or if you're short bias, sell it all day long. You still have to see some stars align and have a reason to, actually assume risk based off that bias. And if you don't get that, then you're not putting the trade on. And if you have a bias that's, one direction and your bias is not playing out and it's starting to go the other direction, you certainly don't want to just, go against your bias just to jump on the bandwagon.
Good point. So yeah, end of the day, be smart about your bias. That's all it comes out. Be smart about everything with your trading, right?
Yeah. It's not that you may have a bias. It doesn't mean that's what you have to trade, right? Like it comes down to like people focus on, profits versus the process. And if you focus on making money, it becomes a little bit harder. But if you focus on your strategy that you've worked so hard to define, you can be wrong in your bias and in your belief, but because you traded the strategy that you've developed, you can still be profitable. It's not right or wrong. It's about how do I be profitable in the current market state? And I can be totally wrong in my belief of where I think some of these markets may go, which happens regularly, but because I trade my strategy, I can still be successful, and I can kind of walk that line between what I believe is going to happen and what is actually happening, and really kind of separating those two concepts.
Dan, I think what you're saying is it's all about risk management. If you can't manage risk, you can't do it.
I've always found that some of the better feelings I get from participating in the markets is for making the right decisions, whether it's to exit a trade at a loss or not take the trade. And not acting on a bias is one of those things that generates that feeling. It's like, holy cow, like, was I wrong? And did I save myself quite a bit not doing anything because I didn't have a reason? Like I had the bias, but I didn't have a reason to act on it. And it's like, wow, like I saved myself, a lot of misery and pain, just by not doing anything.
Which is a great feeling. I wish we felt that. I wish we felt not losing money, like having a FOMO for not losing money. Like we always, the FOMO of trading, I've talked about this before, is always like, oh man, I missed out on this huge move that I'm sure I would have crushed trading. Not, oh man, I would have really got ran the F over right there. Like,
well, that's the difference. What you're saying there, Jack, is the distinction between people who are focusing first on capital preservation versus focusing on profits. Like we're all here to profit, but number one goal has got to be capital preservation. And if you're more focused on preserving your capital, that FOMO is not there. You take comfort and joy in preserving that capital.
And if you're demanding your bias play out in the market, you're only expanding your risk.
That's a good point. Well, with that, Dan, you want to take us home? We got a little quote about bias or something else?
I do. It comes from Austrian, became Chicagoan psychiatrist Rudolf Drakers. I don't know who he is, but I looked him up.
It's always good to look up people that come from Austria in the
looks like
20th century. Just
moved himself to Chicago, but I really love the quote that he had. Man does not see reality as it is, but only as he perceives it. And his perception may be mistaken by bias. I thought that was pretty deep.
That's the heart of it.
Perfect.
Yeah. I mean, the concept of bias applies to everything, and it's good. Like, the more you can recognize what biases you might have, the better. I mean, it's a statistical term for just something that's shifting your view away from the true probability of something, right? So work on those things. Always good. Become a better person. It's the holiday season. Well, the ghost of biases come around to everyone and set you straight. Hogue, Dan, Mick, have a happy Thanksgiving.
You too.
You too.
You too.
Yeah.
Enjoy that White Castle stuffing, Jack.
Yep, gonna get my crave case of 30 sliders, break them up. It's gonna be great old time. So looking forward to that. And everyone out there who's watching this, hope you are having a nice holiday season. We'll still be around next week, but until then, Hogue, give him a heartwarming message. You're better at that than me.
Sure. It is, Thanksgiving, and it's time to give thanks to all the opportunities we have in the lives that we have. And I know Thursday when I give thanks, I'm going to give thanks twice for you guys.
Oh, that's very nice. All right, that's all for Coach's Playbook. We'll be back with hearts full and clear eyes next week on Tuesday. Till then, trade well, everybody.